The second market maker trap designed to push traders out of good positions is what we call threat bluffing. This trap appears when everything looks perfect, but the market briefly acts as if your trade is about to fail, not to reverse, but to scare you out. You spot a clean BRR pattern. The market is clearly trending down, sellers are in control, price breaks below a support level, pulls back to test it again, and gets rejected with a strong candlestick pattern. The setup is valid. The context is correct. Your analysis makes sense. You enter the trade. At first, price moves in your favor for 1 or 2 candles, just enough to make you feel comfortable. Then suddenly, the market starts moving back toward your stop loss. The closer price gets to your stop, the more uncomfortable you feel. Doubt starts to creep in, your confidence fades, fear takes over. To avoid taking a loss, you decide to exit the trade early. And then, almost immediately after you exit, the market reverses and moves strongly in your original direction. That's the threat bluffing trap. Now let me show you how this looks on a real chart. This is the 1-minute Euro-US dollar chart. As you can see, the market is in a clear downtrend, with sellers firmly in control. Price breaks below a support level, pulls back, and that old support now acts as resistance. At the retest, the market prints a strong bearish engulfing candle, confirming rejection at the level. You feel confident. You place your entry, define your stop loss, and set your target. Then something subtle but dangerous happens. Price forms a pin bar, then another one. As price slowly pushes closer and closer to your stop loss, tension builds. You start thinking, maybe I was wrong. Maybe this trade won't work. It's better to exit now and protect my account. So you close the trade at break-even or a small loss. And right after that, price drops sharply and runs straight to the target. Why does this happen? Because market makers understand trader psychology extremely well. They know most stop losses are placed just above resistance levels, especially in trending markets. So instead of reversing the market, they simulate danger. They push price just far enough to trigger fear, hesitation, and early exits, without breaking structure. The goal is not to invalidate the setup. The goal is to remove weak hands. And once traders are out, the market is free to move. If you are not aware of this trap, it will happen to you again and again. You'll keep exiting good trades early, not because your analysis was wrong, but because your emotions were tested. The only way to overcome the threat bluffing trap is simple, but not easy. You define the trade, manage your risk properly, and then you let the market do the work. Set the trade and let it play out. Because sometimes, the market's biggest move begins right after it convinces you that you're wrong. If this video helped you, take a second to support the channel. Like the video, subscribe, and turn on the notification bell. Thank you for watching, and I'll see you in the next one.